Alright guys, let's take a look at the MCQ test correction and let's get it started. So this is the first question I gave you. On this episode I gave you 10 questions with actually 2 questions underlying each one. So let's say 10 chart contexts and 2 questions. First one, what is the context you think is the most likely going to be? I accept multiple answers obviously on some cases. Because the market is never just like black or white, but most likely what I care in here about is for you to avoid taking making risky decisions like identifying contexts that are absolutely not possible. Second question is, do you think there is a trade to take out of the current market context? So here we go. First question, first chart I gave you. You always need to follow the same path. So let's just do it. What you do is not having a look at the broad picture at the first glimpse. I know some of you will do. What most beginners are actually doing is, by the way, exactly what you need to avoid is like having a look at this first, all right? This area, the momentum, whatever. This is not what you must be looking at. First thing you have a look at is where you currently are. All right, currently we're trading into the support context. All right, we do have a momentum signal, yes. We do have a blue arrow, and we were trading close to a breakout target. All right, we also have a context alert. So all of this, you have early information. All right, you have a look at the latest information to see if there is something to analyze first. So in this case, yes. You can analyze, but you need to make sure that you're passing the filters and that you can identify a context. So what is this context? What you do is not starting from here and going down to there. It's not what you do. What you do is starting from there, pulling back in time to see at each moment if you can figure out a context. Once you figured out the context, you stop scrolling back in time. Otherwise, you'll do it endlessly. All right. So I know some of you guys are analyzing this way. All right. This is not what you're meant to be doing. You scroll back in time. All right. So here, support context. What is the previous move we've done? We've gone from support context. We've gotten to support context from resistance context pretty much in a straight line. All right. Then, what have we done before getting into this resistant context? We can see that we've gone sideways, all right? A lot could have been looking like an accumulation, but instead of breaking up, all right, we got straight line to support context, all right? So, what we see is that we've done resistant context, and what we did before is coming from support context, all right? So, we did support context to resistant context, and pretty much sideways action that could have been somehow an accumulation, but there was no range preceding. So, all right, context to context sounds like a range so far. What is the previous movement? Oh, no. Would have been a range if we were coming from a context. No, we don't. So what does this look like? All right. What could this be? Maybe a trend. So in order to be a trend, we need further information. Remember that the trend, you think about trends, about steps. In order to make sure that you have a trend, you need to see underlying steps of this trend. Like, you know what this is, the accumulation, the breakout, the pullback, and the final excess. These are the steps you need to see, and you need to at least see a couple of them to figure out how mature that trend is. Are you still currently trending, or is this trend mature and over and stuff like that? So this, from what I can see, could be the pullback, this could be the final excess, but this has to be the trending. Like, we need to see a breakout, we need to see an accumulation. And that's not perfect, but I would say we spent so much time accumulating up here that the accumulation somehow was not necessarily a usual type of accumulation. But I would definitely say that, yeah, this looks like a trend. How does this look like? We can barely see a breakout, but I would bet that the breakout happened in here. So in here, the indicator just lagged because it's an unusual way of reversing and creating a market top. All right, the indicators won't be perfect 100% times, otherwise I would be billionaire. All right, so I think we did have a trend in here, pretty much a nasty trend, or it's hard to say. I would need further information to make sure of it. But I mean, just have a look at this. If you know what this is, all right, this is the 50 moving average out of the context. All right, so in here, this means we are crazy fucking bearish, and we're starting from something that was crazy fucking bearish earlier and like a long ago. So yes, definitely makes sense for trend. Another kind of aspect that you can use to forecast trends is you must see this, like the trend channel is not, the resistant trend channel is not tested for a little while and prices are working around the support. Trend channel is narrowing, all right? Narrow trend channel definitely means a trend is in place, is in motion, right? So in here we've got an ugly trend, but still this is a trend context. Here's your pullback. Remember what the pullback rules are. You need to go at least close to 50% of the context. We didn't nearly reach it out to this, but we got close to it. All right. Then the final excess, which should see some range signals and stuff like that, we break out through the support context, we find some bulls, and the movement stops there. So I would say what it seems to be the most likely to me regarding what I've done, scrolling back in time, I didn't know what this was until I figured out that this was a pullback, this was a final excess, so this is probably a range trade. The range started in here. This is our first range boundary, second and third. So this is what I would say. We're in a range context in which we're currently trading the third boundary. All right, so the third boundary is below the first, or at least I think it's the same price area. God damn it, that's not what I want. All right, apparently it looks like, yes, we're double bottoming on the same level. So wave 3 or third boundary would potentially be same price as the first wave. So what do you do here? Yeah, you need at least a good signal. I would say target, what we've said earlier, like we've got target, arrow, signal, all right, sine wave is definitely in the bottom in here. So yes, that's fine. We still have a context alert, so it would be nice to at least have a look at the higher time frame to make sure of it. Like the way this moving average looks like means yes, this plus the context, we definitely have to confirm this to make sure we're not taking too much risk. And we eventually will take the trade on the higher context instead, all right, to reduce the risk we take. But in here, the context is a range. I would say a neutral range because we got damn hard to say what this range looks like. I would accept bearish range, but I see no reason to treat this as a bearish range. So I would say neutral range. Can we take this trade? To me, yes, we're following the rules. We've got a signal, we've got a confirmation, all right? So I would say we need 76% fib, we have it, all right? We need to be below context, we have it. We need to have a triangle, a signal, we have all of this. So can we go ahead and process with this trade? I would say yes. Is that a risky trade? I would say a bit. I would say the beginners should pass on this one because there is a context alert and the beginners should trade that on the higher time frame. But is that a trade for experienced traders or professionals? I would definitely say yes. All right. So the good answers to me in here would have been neutral range. That's what most of you guys answered for more than 31, almost 31%. Some people said bearish range for 23%, and another 25% said trend final excess. So I would accept this one as well, all right? Because in here the pullback barely got to reach out the technicals, all right? So this could just be the pullback, all right? And in that perspective, we're just pullbacking in here, and then we're making final excess. Anyway, final excesses are traded almost the same way, all right? That trend final excess means that we're going to range, all right? So consider the final excess as the first boundary of a range. The difference between the two contexts, like if you said trend final excess, I accept that, all right? I'll say that, okay. The problem is for a final excess, you need to go lower, which means you need to make a lower dip than this is. We've done that, but just barely did it, all right? So I would say yes, acceptable answer. But if you took that answer, trend final excess, then you must know that the final excesses are only for experienced traders. You must be yellow in the Discord in order to do so, all right? You don't trade reversals and trend reversals unless you get a list of experience, all right? The beginners, you certainly don't get your hands in here. And the green guys, way too dangerous as well for you, all right? So if you answered final excess, I hope you didn't answer yes, that's a low risk trade, all right? So it definitely isn't. Regarding the tradable answer, most of you guys have said yes for experienced traders for 28%. So I'm fine with that. Others said like another 23% have been saying it's a low risk trade for everyone. I would agree with that if you figured out this was a range, but I would say it's something in here doesn't belong. So I wouldn't accept this answer because I think context alert in here doesn't give a green light for the low risk profiles, like the beginners. All right, beginners should trade this within the context, so they should be trading the higher time frame and not trading right here. Okay, so for beginners, no way. The context alert is too dangerous for you, so you get to trade the higher time frame. So I would say to those who say yes, it's a low risk for everyone, I don't get it. I don't think it is. If there was no context alert, then it would definitely have been the case. So yes, experience for yes for experience traded. I'm fine with that. 31% said no, but I need to have a look at the higher time frame. That was definitely the most reliable answer to me, at least for low risk profile. So it's yes, but for risky traders that have some experience. Otherwise, it's no for the others, and they need to have a look at the higher time frame. So I'm pretty fine with your answers, guys. You were pretty good on this one. Question number 2. All right. So what do we have here? Same stuff, all right? So first thing we do, we analyze the global stuff, all right? What are the short-term information? We do have an arrow. We can see that we have a breakout target in here. Momentum's okay, sine wave's okay. It's an oversold signal. And the worst case scenario, we've got a squeeze, all right? So the squeeze, first thing first, for beginners, you don't trade or you take very low leverage. So if you've answered yes for low risk profiles, that's not good, all right? Low risk profiles, I want you guys to trade safe, all right? To feel the emotions of trading without risking your capital. So if you want to feel intense emotions, then all you're going to end up with is probably like nasty losses because you won't be able to handle those emotions. So I'd rather like for you to be safe long enough to survive rather than going into risky trades, all right? So anyway, what we have in here is this, all right? Are we trading the resistance context or support context? No, we're trading the trend channel, all right? So in here, if there is a trade, what is this? It can be only two things, all right? If you said yes to a trade, the context must be either an accumulation or a pullback. But it cannot be any different than that, all right? These are the only conditions you're going to trade the trend channel, all right? Because trading in a trend channel is only on a trending context. If you figured out this is a range and you said yes for a trade, no way, you don't get it. All right, you don't trade the trend channel anywhere different than a trending context. So in here, if you think there is a trade and if you answered yes, you better damn hope that you said it's a trending context. All right, now this one is tricky, and when I made this screenshot, I actually didn't do that on purpose, but still, it's a good exercise. So the thing is that in here, the worst case scenario is that if you globally analyze this thing, because you see a big move to the downside, then big move to the upside, you would say, what the fuck is that? That's probably just a range. And that's where you get it wrong. Because remember what we said earlier, you don't analyze like that, right? You analyze like that, right? And you try to make sense. And anytime you make sense to it, then you stop watching earlier, all right? So let's start of it, all right? We're from the trend channel, so if there's anything interesting in here, probably it's a trending context. So last move, we're coming from resistance context to support, to trend channel support, all right? We're out of Fibonacci retracement, 23%. That's the first Fibonacci retracement. And then what have we done? All right, straight line from a support trend channel. That went from resistance context, but for coming from support context, right? So I think I've seen enough. I mean, at least in my personal understanding of the strategy, I think I've got more than enough, all right? So let's scroll back in time. What do we have? A range with two opposite square signals. Remember that what it says the range is mature. So even if it doesn't really look like a range, the signals have been detecting that something was hesitating in here. Hesitation means ranging, context probably at stake. So we were ranging, went from resistance context to trend channel to resistance context. So I'm sorry to say that, even if this doesn't look like a mature range, we still had a range in this area. All right, so we ranged in here. What we've done is that we got on resistance context, trend channel, we bought the previous range tops, and trend, all right? This is where we broke, all right? There is a breakout in here. So it's not an unusual breakout, so the actual breakout area would be in here, all right? When we accelerate through both the trend channel and context channel, right? And in here, obviously, we made no trend line. That's the problem with this case, right? Because we would have an ugly trend line in here, and this is where we can only say that we have a breakout. So it is not a typical trend, perfect trend. It would have been hard to figure out the breakout trade in this thing, but still, it is a trending context. How do you see that? Look at the trend channel, right? The trend channel is pretty narrow. It's riding the resistant context. We've got unfolding boxes in here and here. It's definitely looking like a trend. So yes, I'm sorry to say that. Even if the breakout isn't academic breakout, there is still a breakout. We broke a trend line. So yeah, it's not the typical way of breaking trend lines, of creating trends, especially not when you reverse from bearish movements. So yes, this is not an usual context, but still in here we are in a trending context. So what is this? Like we said, breakout. This is probably the divergence. We're pulled back into the trend channel. We're at least 50% of the context. We're trading a Fibonacci retracement support areas. We've got some breakout target out of the 38% Fibonacci. What are we trading right now? A freaking fucking pullback. So the context in here is a pullback. All right. What are the answers you gave me? Yes, for 44% of you, I'm pretty happy with that. This one was a tricky, example. So if you figured it out, then clap, clap. Very good job. I'm really happy with that. That's like the most reliable answer you could have given out there. Do we take this trade is an actual good question. So I would say for professional traders, eventually, and I'll probably take very tiny position sizing in there because we've got pretty much quite some information highlighting that this cluster in here is very important. We've got the 38% fib, we've got the target, we've got the context, but still, normally the pullback could reactivate in here just out of 23. We already have a blue reversal, a signal, momentum, and sine waves are both okay. Just the only problem will be the squeeze. So to me, in order to buy this signal, the only thing is the squeeze. That just dampened my expectation. So what am I going to be doing in here as a professional? I'm probably going to take the trade. I'm just going to take a low risk trade, a tiny position sizing. I'm going to keep quite some money to eventually buy the 38% Fibonacci in a further and deeper retracement. All right. This area is clearly an area of interest. It's been supporting in here and here. We clearly see that it's been worked out well. So if we rebound in here, that's fine. I wouldn't miss that trade. But I will be ready to get to this area, which has a very interesting cluster. If we ever go down there, there will be a lower risky trade. So what did you say about the trade? So globally, I would say there's approximately a 40% guys who said yes. Most of you said yes for professionals. All right, so I'm fine with that. To me, that's the most reliable answer. Those who said no, it's just noise, nothing to do here. I would agree with that. That's a good answer because there is a squeeze. All right, the squeeze says noise is down the corner. So be low risk and have large stop losses to absorb the volatility. So yes, I would say the most two answers are to me the best ones. No, because it's noisy, because there is a squeeze, and yes for professionals, but yes, I would say you really need some experience in here and emotional management, and yes, experience in trading. This is definitely not a trade for beginners. I would accept as well for experienced traders, those who have at least 1 year, the yellow guys and stuff like that. I would say it's okay for them. But it's going to be risky. So even for the yellow guys, they will really need to go with very tiny position sizing in here. And even I myself as a professional would have taken a tiny trade. All right. So that's it for this one. Moving to the next one. Number 3. Same exercise. Where are we trading right now? All right, so resistance, support context. We do have range signal that's been broken down. We're gapping, so there's a huge gap between those candles. We don't know the time frame. You don't even know the assets. All right. You can see there's many gaps in the past. One in here. So it's a gapping structure. We got one in here. All right. So we've got gaps, range signals that get broken out. You've got a positive range signal in here, a bullish range structure. So I would say, oh my God, the short-term signals are not great. We've been oversold, but there is no blue signals. All right. So I wouldn't say that is interesting. I would say that's just what the hell is that? So we're going to try figuring out the context at least. But normally you don't even go any further than that. You said that is not interesting. There's nothing to do here. So let's figure out what this context could be. But obviously at this stage, I can tell you there is no trading out of this. So trading is no, absolutely no. So I'm going to just have a look at what you said in terms of this, just about the trade. All right. So, I'm pretty surprised. There's a 27% of you guys who've been answering yes for a trade. That's not even a signal. What the fuck are you doing in here? So those of you who said yes to trading here, there is definitely a problem. There's not even a signal. What the hell are you trading? So those who said no, the majority, all right, there's an approximately 70 to 75% people who said no, then yes, I'm fine. But to me, yeah, that's most likely noise, or you actually need more information, but there's definitely not something in here. So these are the most two answered questions, all right? So 31% said no, but this is interesting, I just need more information. Yes, you definitely need a better risk management to get to this trade, to make this a trade, and another 30% or almost have been saying, no, there is just noise, there's nothing to do here, and personally, I would definitely fucking agree. So anyway, let's try figuring out a context out of this, even though to me, it's just noise, all right? So there's not even a context in here, but we're going to try scrolling back in time to try to figure something out. So we're currently support context. Where do we go from? We go from resistant context pretty much in a close trading period. After what? Before that, what did we do? Support context. Before that, resistant context. Oh, that sounds like a range. Before that, support context. So before that, resistant context. Before that, we don't know, but probably support context. What the fuck does this look like? Don't have a goddamn clue about it. All right. So I would say this is just the worst kind of asset you would like to trade. So get the hell out of here. If that's a range, then it's a neutral range and it's pretty fucking mature. We would be like 1, 2, 3, 4, 5, 6, 7 boundaries in. There is absolutely not a goddamn structure to this. All right, so we would have tried breaking in here, failing. The support lines are consult. All right, so it is definitely just absolutely not tradable. We tried going bullish, we failed. We might be trying going bearish, and eventually we're going to trend, or we're going to fail as well. So this is just pure fucking noise. Get the hell out of here. All right? So next one. This one's quick. We don't need to spend more time. It doesn't even worth a look. All right. Next one. What the hell do we have in here? Same exercise. First of all, we analyze some informations. We do have a target, we do have an exit signal, we can see a divergence as well. There is a blue arrow, we're trading the support context. The sine wave is pretty much okay for a buying entry, right? So yes, I rarely have a look at the sine wave, but you can, all right? And I'm looking at the trend sine wave. Remember that these are from the options you can have for the indicators. This is not necessarily, right? It's just a better risk management signals. Oh, I would definitely note something in here. This is ugly, all right? So this is the moving average. I'm going to show you how to do this. If you want to set this thing on, and that's something you can do, even for beginners, but just take it as a side information, all right? Mostly helping you with trends. Sorry, not that. You double click, you double click on the indicator, all right, and you can set the context moving average period, all right. One, which is by default, set it to off, all right, which means there is no moving average. If you want to see the moving average, I strongly suggest you use the 50 period moving average. You can use the 20 if you want to, but it's a little bit more aggressive. The 50 is really great for trending context, all right. So it will drive this as a long line, as you can see. This line, for example, when Bitcoins is in here, all right. So it's said that the background trend is bullish, all right? We know that, but still, it can give you more information, especially when you're having a look at an asset that you don't know, in which you just have a frame of time to look forward for, all right? Which is good for us, as we have just a few information. I show you just a portion of prices. So seeing a moving average going down so fast just tells you you don't know what the fuck happened before that, but you can tell just one thing. It's been pretty vertical, all right? So we don't know where we come from, but you can tell that we're coming from pretty fucking higher prices than the one we're currently trading, all right? So I would say that's a reliable information. So we know that we come from bearish trends out of this, all right? And probably strong bearish trends. So in these cases, it would pretty much be worth it to have a look at the higher time frames. Okay, eventually in the future I'll create an alert for this. That could be something I could use. All right, just to make sure that you guys don't forget about those kinds of informations. This is not top-notch information. It's just stuff that the more experienced traders among the community must be using. All right, these are additional information, just like the trend sine wave and stuff like that. Right, these are additional spices for better risk management. Anyway, so like we said, summing up information, yes, we do have a valid signal. It's an exit signal close to a target, so that is definitely a good signal. The context boxes have been broken down on the support, but not the resistance, so we can still trade, though it's a little bit risky, so we're not going to go full all in. The signal is great, all right? It's an exit close to a target, so we definitely have a very good signal, but still, this will dampen our expectations, so we won't be too aggressive. It will be a buying entry out of a freakingly dangerous moving average. So yes, we definitely, if there is a trade in here, it's for professionals, not necessarily professionals, but if you take it as a beginner, you go very low leverage, all right? Because there is a risk in here on these trades, obviously, all right? So we go anyway further than that. What do we go? How did we get there? Resistant context, pretty much straight line, and as you can see, we fucked up the support context out of a very dangerous moving average. Though still, we're gonna try reading. We don't have the context yet, all right? So what did we do out of this? All right, trend channel, context channel, trend channel, context channel, context. Oh, that's weird. That's ugly. All right, could look like a bullish trend who terminated in here, all right, but there's no breakout, all right, so there is definitely nothing you could have traded. You see that we supported the trend channel multiple times, 2 times in a row, right? We've done context channel, trend channel, context, but there's no breakout. Do you see a breakout in here? Could have been one in there. This could have been a breakout, but look at this ugly pullback right after. It's probably because of this, all right? There was a huge bearish trend proceeding. Maybe that's what explains that we tried the trend trade in here and bam, the bears just took it over. So I don't know, but in this kind of context, I would say that the trend in here was so great, so big in the higher time frame that this is probably just a pullback, all right? We're probably pullbacking on the higher time frame. Still, what would this be? Remember one thing, when you fail to trend, means you're in a range. So the context in here would be a range. The range is definitely fucking mature, right? As this would be like first boundary, third, third. And we would be fourth boundary in here, and there's probably one preceding. We don't know for sure, right? As you can see, we come from a bullish context. So yeah, I would probably say that in here there was a support, right? So it's pretty much like 1, 2, 3, 4. The fourth one has been leading up to this up. All right, we tried trend trade, we failed, and we're building the fifth one. So is there a trade anyway for beginners? No way. All right, for beginners, you're probably you're out. This is where you would have traded as a beginner, all right? But definitely not here. So all of you guys who said, sorry, I'm looking at the Fed Powell's testimony as well in the same time. So anyway, where were we? So it's a mature range. So anyone who said yes for low risk profiles, we're question number 4. So okay, I'm fine. Just 8% of you guys said that, so I'm fine. But that's a bad answer, all right? If you answer that, this is definitely not something that you want to repeat through time. It's not a low risk profile. I would say this is a range context, because that's what seems to be the most probable to me. We tried to trend trade, we failed. I would say regarding this current context, yes, would say a range, but it's a mature range, and I would certainly suggest that you have a look at the higher time frame to see the bigger picture and give a sense, give an explanation to this very sharp trend line, moving average, all right? But I'll probably set up an alert for this when the moving average will be so sharply orientated. I'll eventually trigger a context alert for this in the future. All right, I'll probably consider that. I'll write it down for a future update. That's duly noted for the next update. So yes, mature range. I would say that's so. Can we trade as an experienced trader? All right, we're 5th range boundary, so still yes, we've got a quality signal. So we need to make sure that we've got the rules to trade, all right? So What are the rules in a neutral range? We need to have 76% Fibonacci retracement, we're fine. We need to be below context, we're fine. We need to have a signal, whatever. Alright, so we're fine. We can take the trade, but this is only for experienced traders, not to say professionals, and it definitely requires us to have a look at the goddamn higher time frame also. So this is what most of you guys answered, 26% and half said for pros only, another 26%. 0.5, oh, exactly the same number. It's interesting. So more than 50% of you guys said yes for professionals or for experienced traders, and that would be a good answer to me. All right. Those who said no, I would understand that. If you're a beginner, you would definitely say that. Those who said no and have a look at the high time frame definitely is a good answer to me as well. Question number 5. So, same exercise. Where are we? We have a blue arrow with an oversold signal. The sine wave is getting into potential bullish, interesting area, but still it will require a little bit more patience. We're trading at the trend channel and not the context. We do have an breakout alert in here. We broke through the resistance context significantly, but the support context still remains folding. That's what we have in the short term, so it creates pretty much a balanced feeling. It's not crazy bullish, all right? But still, we might be in an interesting area. We need to have a look at this. Remember that we're trend channel, so there's only two contexts that can matter: trend pullback or accumulation. Do you think this looks like a trend pullback? There is no trend. So then in here, if we go any further with this analysis, we just need to verify one fucking thing. Is this a mature range? All right, let's play this game. Where do we come from? So trend channel, we come from resistant context, right? That's fine. All right, we need to see some ranging alerts, like we've got multiple of them. All right, multiple range alerts. So that's fine. All right, so we go from trend channel. We go to trend channel from context. We've gone to this context from the opposite context, right? We've gone from this context to the opposite context. We've gone from this context to a potential trend channel context, but there was no breakout in here. So what does this mean? It means damn, 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 and there was probably another context first. So we're all 1, 2, 3, 4. Yes, we're mature. That's fine. All right. So we're good to go on this one for a potential accumulation. Okay. What is the next condition we need to have for an accumulation? We need to have major higher lows. All right. The previous bottom must not be the lowest low. All right. So in here we're fine. All right. This is not the lowest low. We're fine for an accumulation. We need to have, all right, trending signal like blue signals. We have that. That's fine. We're back into the trend channel. All right. We must be at least 38% retracements and preferably not below 61. So we're definitely into the area for an accumulation. All right. So everything is respected, fully respected in here. What is this context? To me, that's an accumulation. That would be the answer I would give out there. Those who said range, I would say okay, because so far we don't know, but I would have liked if some of you guys figured it out to be an accumulation. The range is mature, we do have all the signals we need. That doesn't mean it's going to work out, all right? If it fails, we're going to go straight line to this. Remember that accumulations are not trade for beginners. Beginners don't even care about accumulation. You need to figure them out, but you certainly don't trade them. So, as an answer in here, if you said, that's an accumulation, but if you said it's a low-risk trade for everyone, that doesn't work out. It's obviously a trade for professionals or experienced traders only. It's an accumulation context to me. Let's see who figured it out. All right, so 40% of you said that's a bullish range. I could agree with that, all right, because in a bullish range, remember that what we need to break through the support context, and normally we need to hold the support context. So we're not in a bullish range. So those who said bullish range, I don't agree with you. So 40% got it wrong. To me, this range is not bullish. You would at least require some additional information, like you should have a diamond, a bullish diamond, to figure this out to be a bullish range. All right. So to me, Yes, we do have higher highs and lower highs. That's definition for a bullish range, but normally we should have bought, all right, the market in here inside context, all right, and we should have bought at 61% retracement. It's hard to say if we did. Let's just get a glimpse, all right. So if we set this to this, oh yeah, it was approximately 61%, all right. You said, all right, 50% would have been there, lower than that, there, for example. Right, so yeah, this would be like the 61% is probably there, and the 76 is there. All right, so yes, in here you reversed. All right, this is a potential bullish range. I would agree with that. All right, I would accept that answer. It's not perfect, but I'll accept that. All right. To me, the best answer in here was the trend pullback, and just 6% of you guys figured it out. So I'm not really and necessarily surprised, but I would have hoped that you've seen this one. All right. So work on this one. This is definitely a range, but in here the range is mature, and we could have a potential accumulation. So could have. All right. It's an early sign of potential bullish accumulation. But I'll accept a mature range as well. Do you think this could be a trade? Most of you said no, it's just noise. I would agree with that. At least I'm not surprised. I would like you not to take a trade rather than taking a trade that doesn't mean anything. So in here, there's eventually a trade, but it's a risky one anyway. Question number 6. All right, now we delete prices. On this one, I pretty much messed up because you can barely see, and me included. Normally, I'm supposed to set the context to be darker than that when I remove prices. So still, we're going to try making the exercise. So what is this? What are we currently trading? We got a red arrow. Sorry, I'm going to start all over again. I'm going to use the little dots. So red arrow, right? Close to a 76% fib. We're not yet at. So we're not at, but getting close to. Got a taking profit signals, not the best. Sine wave is pretty fucking lost. What does that look like? We'll see. We'll need to figure this out. So let's play the game. We're here. Where do we go from? We go from trend channel. Oh, maybe we've tested the context first. Starts to ring a bell. All right, context to context with a trend channel. And then maybe this is a breakout. We'll see. We need a mature range to do so. Right, we start from support context, after resistance context, after support context. Oh man, that looks pretty messy out there. All right, so support context, and we don't know what happened afterwards. All right, so now let's count things down. All right, we've got first range boundary, second, third, fourth. We might be at the fourth, so the range is not necessarily mature. Right, it is hard to figure out what the hell is that. Though the range is not perfectly mature, but haha, you see this, I also see that. We got two opposite square signals, positive range. No, it starts to gather interest. At least I'm starting to think that this could be a breakout. So I don't know for sure, I just need to make it validated. All right, remember that breakout must be confirmed by an accumulation. You need to see an accumulation to trade the breakout. Do we see this? I'm not sure, because I don't see prices, but if prices reached out to the context, or at least got really close to it, then that's fine. What else do we need? Just process the information. You need to have little boxes for each and every context in which you know, when I think this is this kind of context, what are the verifications I need to have? This is just how you remove subjective analysis, right? You're not gut trading, you're not thinking there is a breakout. You need to verify that, rationally speaking. Do we have an accumulation? Yes, probably. We're not yet sure, because as we can see, that's the higher that has been noted is there. So we've got very close to. So I would say, all right, that's enough to me. We've got a target. We tried. We pulled back to the trend channel. We made a mature range. All right. We positively orientated this range. And in here, I would say, yes, we probably have a breakout. All right. You can see momentum is crazy fucking bullish in here. So is there a breakout in here? Possibly, yes, possibly. You see the market has accelerated in here, all right? Accelerated, breaking through this signal. All right. What else do we need to validate? Process information. Remember that what you need to validate this, bullish signals. All right, you need to have blue signals, early trending signals near the trend channel. This is definitely what you've got in here, all right? So the market is bought in here a mature range, or at least a range that was visible and clearly visible. And what we've done is that we probably broke the trend line in here. You can see there's a huge acceleration in there, and then we crossed the context. So I would say that the breakout is in here, or is happening in here. Like we're getting crazy fucking rapidly bullish in here. So yes, I would say this is a breakout. The taking profit in here is just very weak signals coming from the bears. So I would say, no, that's definitely not the kind of stuff that you would sell as a bear. This is definitely, moreover, the kind of stuff that you would risk manage as a bull, like you bought and you're just rising your stop loss. You're putting your stop loss below the previous lows, below the trend channel, and you let it go. All right, that's what I would say. Now I'm curious to see how many of you guys would have figured it out, because this is a very tricky question. All right, most of you guys got it wrong, like 57%. Like this is a massive answer. 57% said this is a neutral range. But like I said, no big deal. The only cases you'll get to end up with a wrong context that will put you to a loss is when you trade a range and you actually face a trend. So I think this is one of these contexts in which you'll see a range and this will actually turn out to be a trend. So if that's the case, then anyway, neutral range, would you take this trade? Would you take it? Ask yourself the what question. How many informations in here lead you to believe that you shouldn't nearly even take a trade in here? Right? Yes, there is a red arrow, that's fine. Do we cross 76% fib? No, we don't. We come close to it, but you're not yet at it. All right? First of all, you're breaking the trend channel, so you must wait a bit. All right? Wait for the 76% fib. It's just a taking profit. That's definitely not what you want. All right? Not enough information for you to go against this thing, or at least if you do, you're going to go with very, very tiny leverage. This is definitely not the best case scenario. All right? What else do you see? All right, this is not great. You've got nothing. Where is sine wave? All right, like I said, beginners should nearly care about that. But still, all right, the sine wave is pretty far from a reversal area. So what the fuck are you doing here? Yeah, it really smells like a breakout. All right, so I'm curious to see how many of you. Yeah, oh, that's fine. 15% of you guys have been figuring out the breakout, and I'm pretty fine with that. So those of you who answer this trend breakout, really clap, because that was a tricky question in here. Like I said, the context were pretty difficult to read and shaded. So in here, yes, if you figured out to be the breakout, really, really a good job, because I would say, yes, we're in a breakout context. The market is about to break up, and he's probably going to reach out to these previous highs and keep on going. All right, so that's what I would answer personally. Is there a trade to perform in here? Eventually a breakout trade, yeah, as we're breaking up. So it's just probably a tiny reinforcement. You're rising your stop loss accordingly. That's what I would do. Question number 7. This one is better. All right, so now we've got the shaded context. I give you the latest price action. So this is this is how you should have this without prices. All right. So what do we have? Exit, blue arrow, close to range alert. All right. So range reversal with a blue arrow and an exit. Yeah, that's definitely interesting. We're below the context, obviously. So yes, that's pretty much good information. So what I really, I missed that. I should have seen this. There are no Fibonacci's. What the fuck? So I should have the Fibonacci's in here. I don't know why I don't have them. All right, we'll see. Anyway, let's figure out what the fucking context is in here. So we do know that there is an interesting signal, so we're going to try figuring out if it passes through the filters. So we need to figure out the context first. So where are bullish context? Where do we go from? Resistant context. Where do we come from? Support context. Where do we come from? Resistant context. Where does this come from? Probably support context. All right? So what do we do with that? We count down informations. First, second, third, fourth, fifth range boundary. All right? We have no moving average in here to let us know what the fuck this is. All right. So what will we say out of this? What are the good answer? I have enough information to me to answer some questions in here. All right. So I would accept the neutral range. I would accept the bearish range. All right, because we rejected in the context in here and we didn't break it. All right, and we didn't reach out to 76% fib, probably 61 or close to it. All right. So we're breaking the resistant context in here. We should have broken this one, which means something doesn't go along with the bearish range. Remember that the bearish range, we need to profit take below the context and sell into the resistant context. All right? So that's not the case. Right? In here is no bearish range. I wouldn't accept that answer. So to me, it leaves me with just one answer. It's a neutral range. It's mature, and it's definitely a neutral range. There is no accumulation in here, or could be one in there, a dangerous one, but there could be one, like in here, right, in which we would be doing context to trend channel to context, but no way. All right, it pretty much looks like it's dangerous for an accumulation. We've got range signals, so now it doesn't fit the scenario for an accumulation in here. So accumulation, yeah, far not enough information. Instead of exit, we should have red signals in here, which we don't. So there's no accumulation. This is not a breakout. This is most likely a range, but I would say neutral range, all right? Like, we don't know what the fuck has happened. We would need additional informations, but this is not enough for a bearish range. We should have broken the support context in here instead, and we didn't. So neutral range is going to be my answer. I think that's the only possible answer for this question. And most of you guys said bearish range, and I think you're just slightly wrong on this one. I would still accept that, but please note that for a bearish range, we always break the support context, all right, and we hold on to the resistant context. We do have lower highs, so we've got like 90% informations for a bearish range. We need to hold the resistance and break supports, break previous supports, but we also need to break down the support context, which you didn't in this specific case. All right, so no bearish range to me. That's a neutral range, and just 16% of you said that. Like, it's 53% said bearish range. Yes, it looks like a bearish range, but not all the information can be processed here. So is this a trade? I think yes, but it's certainly not for beginners. So in here, 25% of you guys said this is a low risk trade for everyone. Certainly not. All right. It could be, but you need to have way more information than what you come from in here. All right. You need to make sure that this wasn't a range. That if this was a trend, then in that context, I would have understand, yes, a bearish range. You don't have enough information. I would have liked to have a moving average in here. If, for example, your moving average was like, sorry, not that. If, for example, you had a moving average rising from there, that would have been a good sign that this would have been a trend, all right? This would have been the end of the trend. We would have made a bearish range, and in that context, I would have agreed. You don't have enough information in here, but I'm sorry, it's just because I didn't give them to you. So from what you have, you cannot say bearish range because we didn't break down this. If you had a moving average, I would agree with that. That's a missing information you don't have, all right? If you had the Fibonacci retracement, all right, if this was a trend, so the mistake is mine, all right? If this is a bearish trend, then you should have seen one Fibonacci retracement in here, probably the 23% Fibonacci, and you should be close to the 38 in here. And in that perspective, yes, that is definitely a bearish range buying entry. All right? Mature bearish range, but anyway, beginners cannot take those trades. The range will be mature anyway. 1, 2, 3, fourth boundary, you don't trade that, all right? Only experienced traders can take that. So 45% of you said yes, but experienced traders. I would agree with that, but I would kind of said it is tricky to say what kind of context it is. I would accept the bearish range, but you would need additional information that I didn't give you, but the mistake is mine. Question number 8. Oh man, what does that look like? Quite a mess. So let's review information. Blue arrow, overlord signals. We're trading in the context, and that's pretty much all we have. So let's try to deal with it. What are we going to be doing with this? So where do we go? We're support context. We come from resistant context. Come from support context, that comes from resistant context, that comes from support context, that comes from whatever the fuck this is, we don't know. But it probably was bearish as we come from higher prices. So probably this looks like market building its bottom, right? But anyway, could have been the pullback in here and the final excess, or the final excess is there and you have an ugly range in which we're building this and this. All right, I know what this asset is. Oh, GBP USD, motherfuckers. I'm pretty damn sure that this is it. So this is exactly what we've done. All right, so now I know what this is, but it's tricky. I should have kept that for myself. So anyway, we'll get to the actual same conclusion in here. All right, so what this is in here is that we don't know what this is. All right, we goddamn really don't know. But we terminated a trend in here. We're building some ugly range in here in which we're both breaking resistance and support. All right, so anyway, let's make it simple. All right, it's 1, 2, 3, 4, 5. So anyway, the range is mature. So any beginner, you don't nearly put your hands in there. Moreover, this fucking range looks fucking ugly. All right, so what do we do with this? Mature range, absolutely, I want absolutely no beginners to get their hands on this. The answer in here is a neutral range, any fucking way, and it's even worse than a neutral range. It's a fuck you range, all right, when we both fucking resistances and supports. So we're making lower lows and high highs, worst case scenario, all right? So now let's have some additional information. I'll let you figure it out for quite a second, because there's an information, and that's an important information that I haven't highlighted because it wasn't close to the actual entry prices. But what is this? I'll let you reflect, think about it for a second. I wanted you to figure this out on your own. What is this? All right, breakout, and we're pretty fucking far from the breakout prices. So when you see this, you know that there is a technical cluster in here. At least you need to make a sense out of here. And remember what we've done. Oh man, we can definitely make sense of this area. So this is where the actual tradable signal was. And guess what? That's exactly what we've done with the GBP USD. We've gone there, and now we're about to reverse. We're reversing as we speak, actually. So yes, definitely in this kind of context, trading in here would have been stupid, or at least not necessarily a good technical choice, but in here anyway, it's worth a buying entry in these current prices. All right, so we're probably terminating a bearish trend. As you can see, the trend has been crazy bearish, so next step is probably to reverse this moving average. All right, so we're building a range. It's an ugly fucking range. The signals right now are not enough for you to trigger a trade out of this, so it's a very risky signal to take it in here. So I would say no trade. If you take this trade, you must be aware that this target just gives you another cluster far below the prices. So if you take it, it's really minimum leverage, and you make sure that your stop loss is below this target. All right, so it would have been a tradable signal. I would say yes, all right, because we're clearly trading below the 76% fib. But this is a special case for range, all right? This is the range in which we both break supports and resistance. This is an ugly specific case. Anyway, if you follow the strategy rules, the range is mature, so beginners shouldn't nearly get their hands in the dirt in here, only experienced traders. And normally experienced traders already experience that kind of shit, and they know how to handle this. You wait for the goddamn support trend line, right? So in here, experienced traders wouldn't have taken this trade because they already traded this kind of context, or if that's the first time you ever figured it out, then the next time you won't be doing the same mistake. Okay, so in here, that's definitely an ugly range structure, and we definitely wait for this area. If you take this trade, it's fine, but very low risk, and you need to have a large stop loss, so tiny position sizing. And in here, look at this kind of signal. I mean, this is far not enough to take a trade. Okay, would you take this trade? Most of you guys said no, but this is interesting. Just need more information. I think the information you missed is this one. So yes, you need to have a look at this asset, but not right here. All right, you need additional information. So that's a good answer to me. Some others said yes, but for experienced traders, I would say okay, but no, not enough. I would say yes for professionals eventually, but otherwise I would just say no, that's not a trade to take. All right, question number 9. All right, a new context. What the hell are we going to be doing with this? So let's start reviewing informations. Where are we? Trend channel, we're not even in the context. So if this is a trade, remember what this is, pullback or accumulation. All right, So anyway, when you're trading in the trend channel, every beginner, you don't nearly go any further than that. Beginners don't trade accumulation, and you don't trade pullback, and neither do you with pullback. So anyway, for beginners in here, I can always tell you that, right? I'm going to have a look at the question number 9. Do you think this is a trade instantly? Those who said yes, it's the lowest trade for everyone, 5% of you guys. Sorry, that's the wrong answer. You can never trade at trend channel if you're a beginner. It's only for experienced traders, right? So beginners don't give a shit about the trades when they're not in context. Remember the PDF manual, you always trade in a fucking context. So there's nothing for you to do here as a beginner. So further analysis. So trend channel can only be a pullback or an accumulation. So if there is a trade, it's always going to be for experienced traders only, right? Processing. Just by a single information, we figured all of this out. Next, divergent signal. So yes, not that bad, but it's not perfect neither. It's not the best case scenario as, in terms of signals. What else? That's pretty much it. We had a range target, but apparently the market didn't trade it. We're a little bit higher. Oh yes, we're trading the 38% Fibonacci, and we crossed over 23. So yes, this could be a pullback signal. We're trading the 38% fib. We've got a triangle, and we've got a signal in here. Would have been better to have a hidden divergence, like a red divergence, but this one, I would agree with that. That's enough, right? Just because we traded and we reversed exactly out of the 38%. If we reversed out of nowhere, just like here, didn't mean anything. Remember that the pullbacks always trade close to a Fibonacci retracement. All right. So now, in order to make sure that this is a pullback, we need to verify that we've got a pullback context. What is a pullback context? Means that you need to verify a goddamn trend. At this stage, you should be able to figure out a divergence. You should be seeing a breakout and eventually even an accumulation. Right? So let's try to figure this out. Where do we go from? Support context. Right? That's fine. We oscillated throughout the trend channel. So yes, that could definitely be. We come from there. After a trend channel, from a context channel, so yes, we could be like ranging to pullback, all right? Ranging for the pullback. We need to be at least 50% of the context channel. We need to be close to Fibonacci. We are, all right? So fine for the pullback context. Now we need to verify and make sure that we have a trend. Wouldn't this be like a divergent structure? Clearly look like that, all right? And definitely any fucking way this looks like a breakout. So do you need any more informations? Personally, I would say no. You got the breakout candle, price accelerating through this. You're breaking through both the trend channel and the context channel in here. So yes, there is a breakout, right? Where is the accumulation? There is no, all right? We haven't done support context to trend channel to support context, but look at all these ranges, all right? There you've got two opposite square signals, so it is not an usual type of accumulation, but you can say that you had a range in here, the market just broke down out of it, simple as that. It probably has been like this, all right? So I can't say for sure because I don't see price, but even not showing prices, I can tell you that this is what happened. We probably built a bearish trend channel in here and we broke it down. So this is where we triggered a trend, definitely. There is a trend, we diverge, we're now pullbacking, still have the final excess to make. That's what I would say out of this. So is this a trade? Yes, it's a trade for experienced traders. That's it. This is the only answers I would accept in here. Though, question number 10. I need to scroll back in here. Last question. Let's see what this is. So, in here, we've got overload cluster, squeezing alert, red arrow, into the resistant context. All right. So we need to figure out what the hell this is, all right? Can be a range, can be a trend. We need to figure this out. So we need to scroll back in time. So resistant context, where do we go from? Support context, where do we go from? Probably a trend channel in here, but it was very close. But anyway, I would say we need to note this down. So it looks like that. That is the next move. So trend channel in here. We didn't go to the support context. So we got context, trend channel context. We need to verify if there wasn't a breakout in here, and support context. I think at this stage, I've got more than enough waves. Remember that I don't see the prices. I don't know what the fuck happened, but I've got more than enough information without showing the goddamn candles. All right? I think right in here, I've got enough information. All right, let me show you what those informations are. All right, let's process those informations. Range, mature range, accumulation, definitely a breakout in here. All right, you can see the trend line, the market is breaking through it, accelerating, breaking both, unfolding context boxes. All right, all of those information clearly said that in here we made a breakout. So accumulation in here, breakout following through. What is the next step? Divergence. We can't see the divergence. Maybe it happened in here, like we made a first top and a second divergent top. We don't know for sure, right? Or maybe we failed in here, right? We don't know. I can't see any red arrow in here to tell me where the prices went. But eventually we just gone here and made a divergence in there, right? So in here we're lacking of informations, all right? It would be better to have additional informations. We missed them. All right, but if we reverse in here out of a target and that we went to in here, then this is your divergence, right? In that case, we would have made accumulation, breakout, divergence. This would be a pullback, right? In here, we would need an additional Fibonacci extensions, an additional Fibonacci, all right? We would be market top to market bottom. All right, sorry, market bottom was in here. Sorry about that. So, all right, let's do it again. So, high, high, low, low. We'll try to emulate the Fibonacci, the biggest. Fibonacci 50 would have been there. So, this is where you'll have your 23% fib. This is where you'll have your 36, right? Your 38, all right? So, right now, we would have been, in this case scenario, right, from this bullish trend, we would have been like, if we made a high in here, like, all right, if we've made the divergence in here, that will mean first pullback to 33%, second pullback to 38, all right? If the high is in here, if the market top is in there, all right? Worst case scenario, we made a double top, and in that perspective, then that's totally normal that we pull back in here, but this is just a pullback, all right? We're still on top of the breakout area, so this could just be a pullback, all right? So in here, I would say it's a tricky context. It is definitely hard to say because we do have a trend, but it's not yet finished. All right, we clearly have a breakout. So if we've got two options, either this trend is still ongoing and it's pretty much in the pullback phase, waiting for a final excess and making a high. All right, or this trend has been terminating with an ugly reversal structure, which is a double top. And when the trend terminates out of a double top, then obviously the range afterwards retraces pretty deeply. So in here, I would accept two answers. It's a really tricky context, all right? Because I would need prices to really figure out what happened. I don't have those informations, but I'll try doing my best, all right? So what I'd insert in here is that I would say, okay, for a bearish range, in this case we were bullish trending and we're going to bearish range. And what will happen is that we'll have first range boundary, second, we're looking for the third one, and it would be a bearish range, so we'd need at least 61% retracement, which we exactly are trading, right? We would need a red arrow and a trading signal, right? The squeezing pattern just showed up out of the latest two candles, which means if you took this trade, you would be really cautious, knowing that if it reactivates, you put your stop loss out, and simple as that, all right? So it's a risky trade, definitely, all right? But this would be a bearish range. So I would accept the bearish range context. It's tricky, and it only works if you've got a double top in here. I don't remember those assets. I clearly don't know what the hell I've been doing back in the days. Like it was just 1 week ago, yes, but I don't remember what answers. I don't remember the charts I pulled out, despite the GBP/USD, was really an obvious one. So anyway, okay, you've got range context in here that. Or range alerts, all right? It's just a single alert, so that would say that's not enough for you to actually say this is a bearish range for sure. This could be a pullback in here, and in this context, then this would just be nothing. So I would say the only tradable context, all right, if you need to trade this, is only the bearish range, all right? Cannot be anywhere. But this could be just a pullback, and if that is, then this area is just going to be fucked up. This is why I think we've got the squeeze. The squeezing pattern just shows that there is hesitation in this area, because this could just be a squeezing area in which we just die out here before, bang, we fucked it up, all right? Or this is a squeezing range and We terminated the double top in here. The market has terminated its trend. It's going to consolidate deeper. It's going to go search for probably the next level, which is going to be probably the 61% fib. All right, you're going to target the 61% fib, and in here is going to be a strong buying entry. All right, out of a mature bearish range. All right, and in this case scenario, the market will have double topped, gone two bearish waves to consolidate, and buying the 61% fib in here would be interesting for professionals only. All right, professionals and experienced traders, remember once again, the beginners only take the third range boundary, never the fourth one. And in any way, for beginners, you don't trade bearish range. So for beginners in this context, if you wanted to trade, you need to wait for this price, and you need to wait to break up the resistance context. So for beginners, all right, let me see what the answers are. Whoever said yes, well, though in here is just 3 of you guys who said that. So those who said yes, it's a low-risk trade for everyone, it definitely isn't. If that's a trade, it's only for experienced traders or professional. Most of you guys said no, and I would pretty much disagree with it. It's an experienced trader trade, but if you said no, at least you're not trading, which is not that bad, right? When you're wrong with the context or trading context, that's not a big deal. What I care about is you not to get into wrong footing scenarios, like there is a bullish trend and you're selling. That's not good, all right? So in here, if you don't trade, that's fine. If you take the trade, make sure that you highlighted the fact that this is a risky trade and it's only for experienced traders. It has an interesting potential though, but if it triggers, then you must be aware that anyway, that's not a huge trading signal, all right? Like very low risk managing trading signal in here. It's a tradable signal, yes, but for pros only, and I would definitely, pros and experienced traders, and those of us who are experienced, we definitely knew that this kind of trade is definitely not where we put a lot of money. This would generally be a 0.5% to 1% risk on this trade, and with a large stop loss. All right, that's it for this one. So as of the feedback, you guys said for 72% that the difficulty was high, but challenge is good. So I'm fine with that. That's what I hope for. And concerning your feedback, you guys gave me some positive feedback, so I'm fine with that. Some interesting information as well that I will put in consideration. Some people wanted this to be in a different YouTube playlist. I don't think it's worth it. Some of you guys just say, all right, I figure out that I need to work a lot. Yes, you need, but that's no big deal, right? I put you guys into the highest level of difficulty. It's just for you to work yourself out of here. Once again, you're not going to be a trader out of just a few weeks of trading, not even a few months. It takes years, and you always start weak and you bring yourself up. All right, this one is a huge. All right, let's insist during the brief on the fact that recent context is important because okay. All right, so anyway, the goal of those things, once again, is not to show you how weak you are, is most likely putting you into dangerous situations to see how you handle. So I do everything I can to put you into difficult conditions. These are not easy contexts to highlight, so I can put you into a professional mindset. Even if you're not, you're going to say, all right, that's really way too complicated for me. Then ask a yellow guy, all right? He'll tell you, all right, you know what, I've been doing this for a year and now it doesn't nearly seem complicated to me, all right? So you'll make it. It's no big deal. It's just it takes time because, yes, there's a lot of information to process. But when you'll process those informations, just think how this is. I don't nearly even remember those things. All right? Yes, I pulled them out a week ago, but if you think I remember what I just decided to pick up out of replays 1 week ago, I don't nearly remember what those assets are, not even the time frames. So I feel like I just discovered those charts, and you could give me those charts, I would do the same thing. All right. The thing is that I have a process, and in here I'm explaining this process. And from what you've seen, it takes me an approximate 10 minutes to make a decision. All right. By talking. When I don't talk, I generally don't take more than 2 to 3 minutes out of a chart to figure out what the hell am I going to be doing. And if I do something, I can easily assess the risk management in less than 2 to 3 minutes. That's what trading is. Like I said, it's boring. You can give me whatever fucking chart this is. As long as I have my tools, I can tell you whatever I'm going to be doing with this. What kind of context this is, where are the areas that I care about, are we trading in this area, what the signal, is the signal showing up in this area interesting or whatever. Yes, that's exactly how trading is when you get to be comfortable with it. And as you can see, it's a pretty fucking boring routine because I can be doing this like 100 times and it's always the same process, right? Trying to read out of noise to make sense out of chaos. That doesn't mean I understand chaos, that just means I frame it. I put it in my frame, in my strategy, and this gives me a statistical advantage. That's just about it. All this shit remains chaos whether you like it or not. But as you frame it into something that has a statistical advantage, that's how you can make money. It's simple as that. That's the magical formula on how traders make money into markets. They don't understand it. I don't understand the goddamn shit about the market. I don't know where this thing will end. I don't even know. All right, these are replays. So I knew what would happen when I just pulled out the screenshots, but I don't even remember what asset this was. I don't even remember what happens afterwards nowadays. All I can tell you is that yes, in here I would eventually take a trade, but low risk trades, tiny position sizing and stuff like that. All right. There's just one feedback I would give you guys. I was pretty much surprised of how low the participation rate was on this one. That's no big deal. I know we're somewhat trading. Some of you guys have been taking some vacations. I forgot to share about that on Twitter and stuff like that. So yes, I put it out just out in Discord. I should have communicated a little bit more about this. So I'll make it more obvious the next time. But if the participation rate keeps on dropping like that, like if next month we're just even less people taking care of this, I'll stop it, obviously, right? I'm doing this for the best. It takes times out of me, like 1 hour to make the correction. I have to do it in French as well, so it's 2 hours and more than 2 hours for the correction. It takes me at least 1 hour at least to pull it out, put it in motion, share with it. So it takes a lot of time. So like I said, we're summer trading, so I can understand that we've gone down in terms of interest for this one, but I would hope like a pickup on the next one, not necessarily to triple the participation, but I would hope for more answers the next time for multiple reasons. All right, I do things and it's beneficiating both of us. All right, because you get to learn trading, and I think that's really an educational way of doing it. And secondly, I get to have information from you, right? So I can figure out where you're good at, where you're bad at, and then I can work yourself out of these mistakes, all right? So when too many of you guys are getting wrong in the context, then I know that I need to work out this context with you in a daily-to-daily basis. So having information from you helps me getting more efficient to teach you. So like I said, it's really going both ways and we're all profitable with this. So the more you participate, the better it is for everyone. So like I said, I'm not forcing you anyway, but I would just appreciate a little bit more participation by the next one.